What's good, guys? Welcome back to my weekly reflection. This week was a really good trading week for me. As you can see, I took about 7 trades this week, and on Tuesday I ended up bringing my 200k fund account back to break even with a small win. And then on Wednesday and Thursday I passed to 50k Topstep X account, so now I'm funded with 4 accounts, so a 200k account on Blue Sky, 150k on Topstep with Tradeovate, and then 250k on Topstep X. So yeah, I'm in a position where I really need to prove my consistency right now to then finally get my first payout, because there's no way I can fuck up right now. Like, I have 4 funded accounts now, they're all at break even. Topstep one is a little profit, so let's now get to that payout level. I know I shouldn't focus on this, I should focus on my habits, which is why you see that on Thursday I said that I had a midday, even though I made the most amount of money on Thursday. And that doesn't mean a midday in terms of money, but it means that I should have maybe followed better decisions. I should have maybe had better habits on Thursday, even though it was a winning day. But let's go over the charts and see what nice trades I took this week. Yeah, really interesting because there was a lot of good trades in my opinion, and one really clean A+ setup. So if you hop on the charts and we start on Tuesday, because Monday I did not trade because it was a no news Monday. So I started trading on Tuesday, and my bias going into Tuesday was basically a weekly and daily bearish SMT on the indice trade, so ES and Q and the Dow. You can see that between Monday and Tuesday, the Dow basically did not end up going above Monday's high. So you can see Monday, Tuesday, this white one is Monday, and this little gray one is Tuesday. You can see on the Dow did not end up going above it, but on ES and YM we did. So yeah, that is my weekly SMT. And then on the 50-minute time frame for the daily SMT, that was between the London session and the New York session. You can see that as well. This is the high on NQ of the London session on Tuesday. This is the high of ES London session. It both end up getting swept on ES and NQ right here. But then again here, when I was looking for shorts, we were around here and we were not above the London high on the Dow. Maybe afterwards, but that doesn't matter. At that time we had a weekly and then this daily. Okay, so that was my bias. So going into the lower time frame, okay, I marked out the weekly SMT, the daily SMT, nothing on the low, so I am bearish for that day because we have bearish cracks in correlation. Now what I do is I draw out the true day open, which is at midnight, and then the true session open, which is at 7:30, and I basically look for shorts above these 2 lines, right? So going into 9:30, that's when I trade. 9:30 is right here. We ended up completing this little buy model. Let me just quickly delete this. Before the New York open, we had this clean liquidity. As you can see, this is the stacked up buy side liquidity. What did we do just before the open? We swept sell side liquidity. We were bullish. And then yeah, this market maker buy model started and it ended right here. From here we swept buy side, so I'm not interested in any longs anymore because I'm now looking in shorts because we swept buy side. We are above the true day open, above the true session open. No need to look for longs here, right? So I looked for shorts because we had this daily and this weekly bearish SMT, and then we had a micro SMT. Just neglect this one for a moment. We are right here. And I took a short because, okay, now we had the weekly, the daily, and then the micro, and we were above true day open and true session open, and we just have swept buy side on this consolidation. So I took a short right here. Not really good risk to reward. Maybe I should have, my TP was lower, but yeah, I took this short because I thought this was the next draw on liquidity. After we swept buy side, we're going for sell side, right? And we start this market maker sell model, which eventually played out. But NQ unfortunately ended up sweeping another time the highs right here and formed another micro SMT because ES did not sweep the high again. It was just retracing back to OT and then dropping. So I think it was a good trade. It's just unfortunate, but it's good that I recognize that, okay, this setup is still valid. After we really sweep again these relative equal highs on NQ, I thought, okay, now we are finally ready. I just have a re-entry right now. I lost -1R here. After this displacement, I thought, okay, we're ready to go. But no, for some reason, maybe low probability conditions or just accepting the loss, I ended up taking a loss here. And then there was another micro SMT and then we finally had to move. But this is really important, guys. Whenever you see the setup is still valid, but you just had a wrong entry or the time is not right yet for the algorithm to go towards your liquidity, you can just re-enter, right? Maybe, okay, you took a loss, but now I still made money on this day because I ended up taking this 2.97, like almost 3R trade, which ended up netting me around 2R on the day, right? Because my setup was still valid. I just didn't know, this was just unexpected that we're gonna again go for the highs. Maybe I should have seen this because of this relative equal highs, but this was an SMT, so I didn't really, I thought we were going above it, but we did. So yeah, I recognize it. This was again a clear sweep. If we would have just displaced above it, of course I'm not going to take it anymore, but this is just indicating really bearish conditions because we sweep this relative equal highs, another micro SMT form. Now we are ready to go. I recorded this whole live trading execution on my Twitter. You can check it out there. But I basically expected then this inverse fair value gap to get respected, and then we go immediately towards the low-hanging fruit, which is what happened, right? You see that I took a trade here exactly when the big move happened, so I mean that means something, and I'm glad I took this trade, this re-entry. So yeah, that was Monday. So ended up netting me about 2R, and that brought my 200k Blue Sky account back to break even. That's nice. And then again here, you see just beautiful, right? Again, we then go towards this draw. We go back to OTE. Where do we end up rejecting? Above a true day open, above a true session open. Why? We want to short. We want to short above the true day open, true session open, which could have been another entry right here. But okay, I already took 2 trades. That's my maximum kind of for the day. So that was Tuesday, a really nice day in terms of decisions. I took the right decisions of re-entering, and yeah, I don't think it's high probable because we have multiple SMTs right here, but that was Tuesday. Okay, then we have Wednesday. Let me take a look. Wednesday was a winning day. I took 3 trades, and here again, what was my bias? It was bearish in the beginning and then bullish at the end. So what did we end up doing right here? Let me go and do the 1 hour time frame. Let me go from Tuesday to Wednesday. Let me see where the weekly bearish SMT happened, so you guys can see it too. Yeah, again here, this is Tuesday's high on NQ right here. This is Tuesday's high on ES. This is Tuesday's high on the Dow. And at New York Stock Exchange Open, which is right here, we end up sweeping that high on NQ and also on ES, but not on the Dow. We were trading right here, and this was the high of Tuesday. So that's the weekly SMT. I draw it out right here. And then what did we end up doing? We ended up forming another 90-minute SMT at the top. So basically we swept the previous 90 minutes high, while on one other pair we did not. I'm not gonna check that again because I'm gonna be just making this video too long, but you get the point. And then what happened is I was looking for shorts right here, but it was too early. Okay, so the news on that day was right here. Let me just delete this for a moment so I can click on this news. It was Fed Chair Yellen speaks. Okay, not really important, but what happened basically is I ended up taking a short because I thought, okay, we had this weekly SMT, we had a 90-minute SMT, and now we swept this high, and yeah, I wanted to take shorts because I thought we we're going for the lows now. But as you can see, I'm just like looking for reasons now. I don't really have a clean reason why I took this trade. And that's exactly why it didn't end up playing out, right? Whenever I have a winning trade, I always have a great explanation. before I took the trade, but here it's like meh. It's a weekly SMT, it's a 9-minute SMT, we sweep a high. It's not really looking like a great setup narrative, right? So yeah, also maybe because I didn't wait for the news to be released. And what did the news do? The news basically pushed price again above the highs. We formed another SMT right here, just normal SMT, nothing with quarters, nothing to do with time, just a nice SMT at the highs. And now I thought, okay, we were finally ready to go towards the low, which was my initial bias, but it was just an early entry before news. So what happened? Okay, my bias played out. We're going for the lows. I took an entry right here. Why not here? Is because we still could have gotten just respected this fair value gap and then go up. But after we displace at least like 50% back into the range, like right here, once we are right here, we know that, okay, maybe we're not really bullish, right? Because we have this bearish cracks, this 90-minute, this weekly SMT. We swept the highs, we formed an SMT, we really displaced lower. Now I thought, okay, now this is maybe the market maker, most likely the market maker sell model, and we're going for for this low-hanging fruit, which is this low. So I ended up taking a short with a risky stop loss somewhere at the OTE level at the top of this fair value gap. I ended up playing out just quickly in and out. I don't want to hold this long because high time frame is still really bullish. But yeah, I recognize this internal market maker sell model. I took the trade, took it out right here. And at this point, we had a lot of bullish confirmations to take longs. Why? First of all, what is this 1 hour PSP? Oh yeah, for the shorts, we also had a 1 hour PSP. So if you want to check that, you see this bullish candle on 9 a.m. on the 1 hour time frame. It's bullish on NQ, it's bullish on ES, it's bearish on YM. So that's another confluence for a reversal at that time. So that was my other bearish confirmation. But that aside, I was looking for longs then at the end of the New York session, because we had a lot of nice bullish narrative building up. First of all, what did we end up doing? If we zoom out and we take this range, we're still really bullish. We end up tapping the 0.5 of the range, right? Where do we want to look for longs? Whenever manipulation happens inside of discount, right? So NQ is in discount, so in a place where we can expect price to manipulate and maybe reverse back to the order flow, which is bullish. And so apart from price tapping in discount, we also tapped below the true day open. We are also still below the true session open. So if you're below these, it's optimal for taking longs, right? Then we also were tapping an hour one fair value gap. I don't know if you can see it right here, but there was like an hour one fair value gap in discount of this higher time frame range. Also nice confluence. And we had this 90-minute SMT because we end up sweeping the low on NQ right here, also on ES, but this is a hidden SMT. Not a lot of people see this. Why did price reverse? There was no SMT. Because this was the lowest close on ES. This is the lowest close on NQ. We did end up closing a candle below the lowest close on NQ, not on ES. So that was 90-minute bullish SMT. I took with this trade as well as confluence. So now we are below true session open, below true day open. We tap discount, 90-minute SMT, tap the fair value gap. We have a minute 5 precision swing point. So in the 5-minute time frame, I don't know if you can see it. You can see that this is a down close candle on NQ. And this is an up close candle on ES. So that's another bullish confluence because they are correlated assets. And if they do something different, then that can indicate a reversal, right? And with all this bullish context, I took this with me as a bullish confluence. And then, yeah, we just end up disrespecting this inversion and respecting it. And then I took a long just towards equilibrium of the range because that's a 2R and I don't want to like be greedy and take it to all the way to external because maybe we can just go lower from here because ES at this time, you can see ES took external. So at this time, ES was already trading above this high. So that's another SMT. I just want to be out. I took my trade. It's a 2R. I don't care if price is going to up forever. I took my trades and I am up on the day. So that's what is most important to me, and also fold good decisions, because I risked the amount I said I was gonna risk, and I basically went out when I said I want to get out, right? Which is when we have SMT, when ES already took out the external high. So that was on Wednesday. Not really some really clean setups, but it's tradable. And then on Wednesday I had my best day in terms of money, but not in terms of like the perfect decisions. Maybe I took better decisions on Tuesday and Wednesday, but there was a clear higher time frame bias. And not on NQ, but on ES. If you take a look and go on ES's price action on Thursday, where was this? Let me put it on right here. If you check the economic calendar for the week, we knew that the best day to trade was Thursday, because that's when we had CPI, I think. Yes, CPI. And the most amount of red folder news. So, oh, it's so coincidence that this is the day with the biggest move, right? Like you can just predict it just the week before, and that Thursday was going to be the best day. And indeed, Thursday was my best day. I took a really good trade on ES, and the bias was basically a weekly SMT. So if you're going to check that again, it's just the same thing, but just so you guys understand how I trade this. If you go ahead and we check and compare ES with NQ, you can see that, oh yes, but we end up sweeping the high from Wednesday on Thursday on NQ and also on ES. So, and also on the Dow. So why is this an SMT? Again, the highest close is right here. We end up going above the highest close of Wednesday on ES, but we didn't end up closing a candle, like a candle close above Wednesday's highest close. So that's a weekly SMT. Then what do we have? We have price pumping like crazy on CPI, sweeping the highs. So now I expect this to be a manipulation, because we didn't really have manipulation at the lows before news. So I expect news to be in the manipulation then, and especially after we see this bearish order flow shift. So after this big push up, we don't really like respect this fair value gap. We just immediately like go really and retrace really deep. So this is indicating a bearish order flow. And also if you just check like the 50-minute time frame, you can see that this is not really looking like bullish, right? Minute 15 bullish candle up, and then immediately like an entire move of this was just removed by this other bearish candle. So not really bullish looking, especially on the 1 hour time frame. You can see that this is just a giant wick, and then we retrace back to this equilibrium of this wick and we go and drop. So my bias was really bearish after this bearish order flow shift, after CPI pumped us, and especially because we had these confluences as well. So for shorts, we need to look for shorts above a true day open, above a true session open. We have the weekly SMT I just marked out. We have a minute 5 precision swing point. So it was on ES a down close candle, why it was on NQ an up close candle, something like that. Then we had a really bearish displacement down, just all the way down to the bottom of this fair value gap. Then what do? We stack up low resistance liquidity here, lowest liquidity, low resistance liquidity, low resistance liquidity, low resistance liquidity. This is drawdown liquidity for your trade, and you need a clean drawdown liquidity for your trade. So what do we have? Bearish cracks, weekly SMT, minute 5 precision swing point, a really nice displacement down, indicating bearish order flow after CPI, indicating that CPI is most likely the manipulation. We build up liquidity for the trade, then we retrace back to OTE of the range. And while we do that, okay, we tap some fair value gaps, but most importantly, if you go and look on the 5-minute time frame, look what happened here. I'm just gonna remove the Dow for a second because it's not necessary right now. But if you check on the minute 5 time frame between NQ and ES, you can see that this fair value gap here on 8:45 did not end up getting tapped on NQ. And this fair value gap, same one, 8:45, did end up getting tapped a little bit on ES. And this step is in the third quarter of the New York session, and this fair value gap is in the second quarter. So this is an SSMT fair value gap fill, right? We fill a fair value gap on one pair on the previous quarter, while we don't do that on the other pair. So that's a really nice confluence after all these other things. So at that time, you can see that if you compare ES and NQ, which one looks the cleanest, right? We look for the best structure to trade. So at this time, that was ES. Because if you take a look, I drew out a lot of SMTs, micro SMT, 90-minute SMT, but it doesn't really matter because we have the weekly SMT at the top with this SMT fill, with this minute 5 precision swing point, with the narrative that CPI is just a manipulation, with the fact that we just displaced down bearish order flow immediately after we pump. It's not really looking bullish. We have this weekly, so we can neglect every SMT that's smaller than the weekly, right? Delete all of this, but then still, which one looks cleaner to trade? At this time, I took a loss on ES because I saw this 90-minute and this micro SMT, but because I didn't realize that we had the weekly at the top. That is just not relevant. This SMT is not relevant because of all of these other bearish things I mentioned. So a really stupid trade just because we displaced this minute one fair value gap. Not a really good trade. But then on ES at the time, I recognized this really great structure. And this one was the only pair that was still above true day open and true session open. This one was the one that also had the best liquidity to target, as you can see. So what did I do? I ended up taking a trade after we displaced, after this SSMT fill, after micro SMT right here. So we had the weekly micro SMT, SMT fill, minute 5 precision swing point, clear liquidity. We are trading around 10 a.m., which is a perfect time to trade in a kill zone. So yeah, and then I took this trade. I think this was the most beautiful trade of this week. I wrote it down in my playbook. Let me see how I did that. So CPI playbook, weekly 90-minute and SMT fill. So as you can see, weekly SMT, minute 5 precision swing point. All just bearish cracks in correlation. We have a really shift in bearish order flow. We retrace back to equilibrium, tapping this fair value gap, while on ES or NQ we did not. And then on lower time frame, another micro SMT while this happened, and then displacement, clean liquidity to target, above a true day open, above a true session open. Okay, I'm just gonna repeat this, right? But this just keeps on working, and I just need to keep repeating it to myself because it's so powerful. Again, a really nice trade. The reason why I wrote down that this day was not a good day, like a midday, even though I made the most amount of money, 1K, is because I should not have taken profits based on getting my challenge PT. Like I passed both 50K challenges, and basically my take profit was when I passed my challenge, not really when I should take profit, right? But okay, it doesn't really matter. That's just why I wrote it down. So that was Thursday. Then maybe on Friday, one last maybe thing that we can discuss. Let me see. Didn't really trade anything on Friday because I wanted to preserve my gains for the week. But Friday, again, it's just always the same thing. Like, you can't say that this is not working. Again, a weekly SMT, a 1 hour precision swing point. When this happens, a minute 15 precision swing point as well. Where do we sweep it? Below true day open, below true session open. This is where you want to long then, because Friday is most likely always like, how we call it, TGIF. I think it's thank God it's Friday. It's like an ICT concept that whenever it's Friday, we most likely return back into the range. So we displaced really down on Thursday, and then what do we do on Friday? Oh, coincidence, we displace, we go back and retrace back into the range. So yeah, that's what happened. I don't think I could have got a really nice A+ setup, but maybe after this weekly SMT, after this precision swing point, when we are around 9:30, like New York Stock Exchange open, we tap this true session open, we displace, maybe this could have been a trade, and then target like a minute 15 fair value gap right here for a quick 2 hour. But yeah, that's just in hindsight, so I'm not gonna bother talking about this too much. But yeah, that was my trading week for this week. A really good week from now on. I decided to just go like round robin between my fund accounts. What does that mean? Is like I'm gonna just trade on one challenge, on one funded. I only trade fundeds right now, and then next day I'm gonna trade on the other funded, and then the next day I'm gonna switch to the other funded, and just go around them, right? Because then I think my emotions won't be like attached to one funded account, and I'm just gonna focus on following good habits. I think I'm gonna risk around $200 per trade on my funded. I think that's alright. So when I basically lose how many times, 1, 2, 3, 4, 5, 10 times in a row, and I lost my Finland account. So that's a little bit too much. So yeah, I hope you enjoy my journey. Let's keep going. Let's aim for that payout. Even though we should not aim for the payout, we should aim for consistency. But again, that's the main goal, of course. But yeah, let's focus on building good habits. Let's focus on keeping up the consistency. Whatever you're doing, keep going. We're never gonna give up. This is gonna be a crazy journey, and it's just the beginning. So I see you guys later. Catch you guys in the next video. Peace out.